All right, let's jump right into our EA review. Before you can even think about tackling the forms, you gotta have the basics down cold. So in this explainer, we're gonna lay the groundwork for the 2024 tax year. That means mastering all the essential figures and dates. Let's get to it.
So here's what we've got on tap. First, we're hitting the core tax numbers for 2024. Then we'll get a handle on the tax calendar, all the key dates. After that, we'll look at when those deadlines don't apply, which is super important. And we'll wrap up by navigating some of the recent law changes you absolutely have to know about.
All right, first up, the core tax numbers. You can think of these as the building blocks for literally every single return you're going to touch.
Okay, here's a number you're going to want to commit to memory right away. $14,600. So what is it? That's your 2024 standard deduction for single filers. And remember, this isn't just a random number. The IRS adjusts it for inflation every year to keep up with the cost of living.
And this just shows you how that number works for other folks. You can see for single filers or those married filing separately, it's that $14,600 we just talked about. But look at married filing jointly. It's exactly double, $29,200. Simple as that.
Okay, let's switch gears and talk about tax brackets, because this is a big one. It's probably one of the most misunderstood parts of taxes. You'll hear clients say all the time, "Oh no, I'm in the 22% bracket now," and they think all their money gets taxed at that rate. Well, spoiler alert, that is absolutely not how it works. So, how does it really work? The best way I've heard it explained is to think of it like filling up a series of buckets. For a single filer, your first chunk of change, up to $11,600, goes into the 10% bucket. You pay 10% on that, and that's it for that bucket. It's only when that bucket is totally full that your next dollar of income spills over into the 12% bucket. See how that works? You climb the ladder one rung at a time.
Let's make this real with an example. Meet Melissa. She's single, and she's got $32,000 of taxable income. Now that does put her in the 12% bracket for sure, but here's the key. She's not paying 12% on the whole $32,000. No way. She pays 10% on that first $11,600. Then she only pays 12% on the rest of her income, the amount that actually falls into that second bucket.
Okay, so we've got the numbers down, but that's only half the story, right? Now we need to master the tax calendar. Knowing these key dates isn't just important, it's everything. For most people, the whole tax year really boils down to two big dates. You've got April 15th. That's tax day, the big one. It's the deadline to file and to pay what you owe. Then you've got October 15th. That's your 6-month extension deadline if you filed Form 4868. But here's the part you can never forget, and you'll have to tell your clients this a million times. It's an extension to file, not an extension to pay. The payment was still due back in April.
Now here's a classic old-school rule that every EA has to know. It's called the statutory mailbox rule, and it's pretty simple. If you're mailing a paper return, as long as that envelope gets a U.S. Postal Service postmark on or before the deadline, you're good. The IRS considers it filed on time, even if it doesn't actually get there for another few days. That postmark is everything.
So, we have the rules, but what about when the rules get broken? Or, at least bent a little? This is where a great tax pro really shines, knowing the exceptions and how to help people in tough spots.
The IRS can and does postpone deadlines for certain people. Think about folks caught in a federally declared disaster area, or relief workers going in to help, and of course, members of the armed forces who are serving in a combat zone. These are situations where, obviously, filing taxes isn't the #1 priority. So how does this disaster relief actually work? Well, for people living right in the disaster zone, the IRS usually handles it automatically based on their zip code. They just get the extension. But what if you live somewhere else but your business or all your records got hit? In that case, you're considered an affected taxpayer, and you have to be proactive. You got to call the IRS disaster hotline to let them know. And when you do file, you'll need to write the official FEMA disaster number right on the return itself. Now, the rules for combat zones are even more powerful. Basically, for service members, Red Cross workers, even accredited journalists in the zone, all tax deadlines just stop. The clock is paused, and it doesn't start ticking again until 180 days after they've left the combat zone. And get this is huge. The extension also applies to their spouses. It doesn't matter if they file jointly or separately. That is a really important protection for military families.
All right, last section. Let's cover some recent law changes. Because if there's one thing you can count on with taxes, it's that things are always changing. Staying current is just part of the job, so let's look at what's new for 2024. First, we have the Secure 2.0 Act. This brought in some really important new rules, especially around early withdrawals from retirement accounts. Starting in 2024, people can take out up to $1,000 for personal emergencies without that nasty 10% penalty. And there's another provision for victims of domestic abuse, allowing a penalty-free withdrawal of up to 10 grand. These are really designed to give people a lifeline when they're in a truly tough spot.
Next up is the Federal Tax Disaster Relief Act. This created something totally new called qualified disaster losses. Now, what that means is, for certain big disasters, taxpayers can now add their loss minus $500 right on top of their standard deduction. And why is that such a big deal? Because it completely bypasses the old rule where your loss had to be more than 10% of your AGI to even count. This makes it so much easier for people to get some real tax relief after a disaster.
So look, getting these fundamentals down, the numbers, the dates, the big exceptions, that's your starting point. That's the foundation. But as you can already see, the rules are constantly in motion. And that really brings us to the big question for anyone who wants to be a top-tier tax professional. How are you going to stay ahead of the curve? Because in a world of constant change, that's not just a challenge, that's the whole game.